Folks, good morning. Today is 16th of May, a Saturday, and today I have come up with something very important so that all swing traders, especially the ones who are working employees, can learn something about swing trading. Now let's just begin with this quote. I came across this somewhere in Twitter, so and I really liked it. Bigger the base, higher the space. So what does it actually mean? Now let's just take an example of Lyell's engineering work. Now this is in the month of July 2023. Now what happened is that now if you can see, Lyell's engineering has made an all-time high on Jan 22. Okay, and then it never crossed that high. It kind of tried to break that in Jan 2023, and then it again fell down. So now if you can see, we can really call this entire thing as base. Some might call this as VCP, but let's just avoid calling this as VCP, because this is like a 2-year time frame. Probably somebody who's practicing VCP in weekly time frame might find it a little juicier, but since we are in daily time frame, we really cannot see it. But just for the sake of conversation purpose, let's just have a look at it in weekly time frame, right? Yes, in weekly time frame it looks like an VCP. Volatility contraction pattern, basically it's not a pattern, it's a concept. Okay, now let's just get back to where we were. Okay, now what happened right now? There has been an all-time high that's been created in the month of Jan 2022, and then the base formation has started to happen. Now at this juncture in July 2023, the price is close to all-time high. Now the first thing that you would do is you will do a scan. Now like I said, if you're a full-time trader, which I do not want you to be, okay, since most of the viewers are either part-time traders or working employees, I really don't want you to be a full-time trader, at least for the time being. So you would probably scan this on Friday. Now that is why I have given this as scan on 7 July 2023. If you do stocks close to 52-week high, let us say if any stock that are close to their the price of 52-week high, say 90%. Okay, so if the 52-week high is at 100, the stock price should be 90 to 95. Now this is a little flexible area where you can decide how much close they have to, but I usually prefer somewhere around 90. Okay, so this is the 52-week high criteria. And Friday, since most of us have holidays on weekend, you can do the scan on Friday or Saturday, and this stock would definitely pop up in that scan, because 7 July 23, if you look at from 7 July 22, yeah, this is 7 July 22, and you can see the price is linearly going up, so this would come in a 52-week high scan. Now you would shortlist this stock, add it to your watch list, and you will wait for what? The big base breakout. So step 1, you scan something on Friday and see if it is a big base breakout or not, then add it to your watch list. Now you might already have seen 1 or 2 entries of mine. Now this is an EMA trade. Okay, just like our channel name suggests, Mr. EMA, this is an EMA trade. Now I enter at the high of this candle. Let me just try to, okay, I'll try to enter at the high of this candle with an initial SL below this candle. Now this candle is having a depth of 4.5%, which means I'll not get good allocation. This is approximately 4.5%, so my allocation would not be great. But if you see, the next day the candle high got breached and it did not close strong. So what I would do, say if I had entered 100 quantity here, I would exit 50 quantity immediately, because it did not give me a strong close, and then I would leave the 50 quantity, because the logical SL is the PDL. And then what happened? Immediately I would also have taken the second entry here. Why? Because it again crossed the PDH immediately, and SL would be here. So now in this case, my total allocation would be somewhere around 25 to 30%. Okay, I'm just removing these horizontal lines because the chart gets more messier when I just zoom out. Okay, now let's just see how it fits. So once we have done the scan and it meets our criteria, the watch list will take an entry. Now the money management part comes. So in any trade we will not lose more than 0.5%. Capital at risk, not more than 0.5%. Since the PDH to PDL is 0.45, now the formula says the allocation of portfolio is not more than 12%, of which 6% gets exited the same day. So we have been allocated only 6% of your portfolio, which is really nothing. It doesn't create any impact. But that's not where we end. We have pyramided our position. This is the game. Okay, in the pyramided position, we'll again see how much is the PDH to PDL. Now it's approximately 3.3%, which means we'll have an additional 16 to 18% allocation. So initially we are now left with 6%, and this is now 16 to 18, which is approximately 22 to 23. So at this juncture, we are allocated approximately a quarter of our portfolio, 25, and see what it has done. It just flew into the stratosphere. Okay, now do I know that this is going to happen? No, I do not know. Okay, I'm not an astrologer, and I don't know that this would happen, right? This is just an hindsight bias. Now I just can't come out and brag about such a thing has happened in real time. Okay, so I would take many such trades, and probably 1 of 4 trades work like that, right? Only 1 out of 4 such trades. I don't expect every trade to work like this. In fact, I'm even happy if it is 1 out of 5 trades. Okay, let's just be more realistic. So please don't just go with the so-called media hype or anything where some traders say that no, I have taken all trades which went up by 100%. No, bullshit. Don't just go for it. Okay, even 1 out of 5 trades that you have taken using this setup rules would take your portfolio way higher, right? Okay, now let's just take another example. Now I'll delete all these things because in the future when I just okay, now let's go for the next example. Atul Auto. Now we need to go to 2017. I believe we are 14. Yes, this is 2014. Now what happened in 2014? Now there has been a long base, a very long base that was actually formed. There was an all-time high that was established on December 2012. Okay, and its high just got tested here, and it could not breach the high, right? I hope you can see here the high never got breached. It again came inside. And then what happened? There was another base. Now if you look at in a weekly time frame, there is no better volatility contraction concept that's happened unlike this. This is the most beautiful volatility contraction setup. It's right. This is second contraction, this is third contraction, and you just have to enter above the high and just leave what the market is capable of giving you. You don't interfere with your trades, right? I'm deleting this, so you're not getting into volatility contraction setups. Okay, and please understand, never interfere with your trades. Okay, now let's get back to the setup. December 2012, it tried to make an all-time high. Sorry, it made an all-time high. It got tested in Jan 14, and it got finally broken in April 2014. So now what will you do? You'll start your scan. And when exactly would you do a scan? You would scan on Friday, which is what, 4th of April. Where is 4th of April? This is 4th of April. Now this stock is close to 52 week high. Now let's just see how far is it from 52 week high. It's just 6%. So if you just scan for stocks which are less than 10% from their 52 week high, this would come up. That is step number 1. Step number 2, now is this part of large base? Yes. If you just zoom out, you'll see this is a part of large base. Now all you need to do is take an entry above this high and just wait for the magic to unfold. Right? You'll enter somewhere here and you'll enjoy the ride. Now again the money management principle comes. The money management principle, if you're in a good rhythm, your car should never be more than 0.5% of your, which is capital at risk. Okay, this is just risk principles. And then at a kind of SL, now the SL would probably be here, it would be a 5%. So you'll have approximately 10% of allocation. Yes, you'll have 10% of allocation, that's all, because it's in 5% risk. So allocation formula is equal to, I think I have told many times, allocation is equal to car by absolute risk, which is PDH to PDL. In this case it is 5% and this is 0.5, so 0.5 by 5, that's a percentage. It gives you 10% allocation in this trade, and you need to pyramid it. Now again, do you think every stock would happen? No. How many stocks might happen? Best case scenario, 20% of stocks. If this happens, you're excellent, because in a good market this works. In a bad market it doesn't work. So you need to bring down your expectations. You should understand what are good markets versus bad markets. Okay, and you adjust your expectations along with the same thing, right? If you don't adjust your expectations about your win ratio, then you'll be in trouble. Now what happened after that? It just flew into the stratosphere, right? This is a 200% gainer, and I hope some of you might have made this trade if you were trading back then. Next we'll move to Bombay Bumrah Trading Company. Okay, now this company has created an all-time high on 28th April 2017, and then it went sideways, which is nothing but a base. So April 17, sorry, it's almost May. Okay, May 17 to August 17, which is approximately 4 months. Okay, 4 months of base is excellent. And then what happens? And one thing that I want you to see is that it's a very tight base. It's just 10%. Usually the bases are 20 to 25%, 16 to 24% kind of depths, but in this case it is only 10%, which makes it even juicier. Now when are you supposed to scan? You're supposed to scan on 25th of August. That's here. Okay, that's a Friday and a holiday, so if you can scan, this would definitely come up in your watch list, and then you need to trade. Now even before that, you probably would have scanned, if you scanned on every Friday, it would have appeared many times, but your entry criteria should be above the previous swing high, not in between. So if you scan on here, no, that's like 1.5 month of base, that's not a long base, so somewhere you would have tried. So, and if you have placed an order above the swing high on this particular day, the entry would have triggered and your SL would have been hit. Okay, so once SL is hit, would it be out of watch list? No, the setup might come again next week, and when it happens, it is even more juicier. Okay, so here you would get your SL hit, and then it is ripe for a gain, and the second entry would be above this high, which would probably happen today. And then what happens? it's history. And if you just follow my channel, I always like to take EMA trades. Now you can see here there was also an EMA setup. There was also an EMA setup here. What happened here? SL was hit. So out of watch list? No, I would still keep this on watch list. And then what happened? There was another setup offered here, and I would have taken a trade here or pyramided my position. First entry would be here, SL. Second entry would be here, and first pyramided position here, SL, and second pyramided position here. And what happened after that? Now this is how real money is made. Okay, now in swing trading, okay, it's most important that you understand this concept. Okay, so in swing trading, if SL scares you, you would never make more money, you would be never rich. Okay, so you need to be friends with SL. SLs are nothing but cost of doing business. Okay, in any business you do, there is a cost of running business, right? And trading SL is just a cost of business, that's all. Just because you're giving a capital, don't think that you'll get more money. Okay, in any business you're going to make a loss, you're going to pay for rent, you're going to pay for salaries, you're going to pay for electricity, taxes, etc. So in this trading, SL is nothing but purely cost of business. See, if you open a restaurant, okay, if you open a restaurant and say you made 1 crore revenue, at least 50 lakhs would go towards running business, right? That's how it operates, right? In restaurant business, 1 crore revenue is equal to 50 lakh running business. So in trading, you don't have any cost like that. You just need to have an internet connection, which is absolutely cheap, and you need to have a PC. So do you think that's it's so easy to get rich? No, there is SLs which are actually the cost of business. Now please understand this thing. SLs should not scare you. Setups that form after the SL is being hit are usually even better. And what are SLs? Stop losses are nothing but cost of business, absolutely cost of business. So be very friendly with all these things. And now let's just have a look at the next stock, CRM Skills. This is recent stock. Now I'd like to tell you something regarding this stock. Okay, now if we just check the all-time high, now that has happened on April 2022. See, here it formed an all-time high, and that got breached somewhere on November 2024. April 22, November 24. That's approximately 2.5 years. That's like really long days, right? Now rather than that, if you can check here itself, this is October 24. Now where is October 23? Now this is October 23. So from October 23 to October 24, what is the 52-week high? This candle is 52-week high, the red horizontal line. Now how far is the price from 52-week high? It's just 6-7%. So this would come in a scanner of 52-week high scan. Now when are you supposed to scan? You're supposed to scan on a Friday. Now when is Friday? In this case, okay, Tuesday, Wednesday, Friday. Okay, on Friday it kind of already broke out. But if you did the scan on previous Friday, that is 25th of November here, okay, and you have taken an entry above the swing high, you would have entered well in advance, right? You could have entered here. I can just give you a, okay, now this is Thursday, this is Friday, you'll enter above the swing high, which is nothing but here. And when did it happen? It happened here, right? Your SL is swing low, probably somewhere like here, and you can capture the reward, right? So I'm being little fast, so I'll just try to repeat it, guys. So what I am basically telling is that this red line is the 52-week high from October 23 to October 24. Now if I have ran a scan on 25 October 2024, this would come in a 52-week high scan. Now once it comes on a 52-week high scan and I kind of find out this is a big base, I would try to take an entry above the swing high, which is here, provided my stop loss is little. In this case it is 4.5%. I'll take an entry right here. I'll not wait till here. Okay, though this is an all-time high, this black line, okay, I'll just make it blue. Yeah, this blue line is all-time high. This red line is 52-week high, right? Okay, 80 all-time high, 52-week high. Okay, so either you can take a setup after this breakout happens at all-time high or 52-week high. In this case we are trying to take an attempt here, but that doesn't mean you cannot here. You can also take an attempt here. Now if you can see, this try to break out on November 24, and then the price has paused here. Now you can see it is resting at 8 EMA. Now since it's resting at 8 EMA, you can take a trade here or here, which is nothing but our favorite EMA trades: expansion, price pause, EMA trades. Okay, so we can take an EMA trades. Probably one time the SL might get hit, and the second time when the setup is formed after the SL is got hit, it just makes the setup even more juicier, right? Now what happens after that? Now you can see, if you have given an allocation of 20% in this very moment, there is an impact of 13 to 14% on your portfolio value. This is what we want, right? Now let's just go for another example. Wockhardt Pharma. This happened in 24. Now what happened? This is a big base that's formed. Now when would you scan? You would scan on 21 June 24. That's here. Now is it close to 52-week high? Damn, it is close to 52-week high. This black line is 52-week high that I have drawn. Okay, this is just 8% from 52-week high, so this would come in scan. That is criteria number 1. Criteria number 2. Now this is a part of big base. Yes, this is part of a big base. Where would you like to enter? I would like to enter above the swing high to make things easier, and I would like to pyramid my position at 8 EMA. So if I have taken an entry here, I would go for 4% SL, that's somewhere here, and would write the whole stock. So when I have given a 4% SL and I allocated, and I'm willing to take a 0.5 capital at risk trades, I can allocate somewhere 20% to my portfolio. So 20% of portfolio moving just high like this, it would give me an ample opportunity to make a very decent impact on my portfolio. So the base formation has started from March 24 to June 24. That's approximately 3 months of base, which is a very good thing. And then you just see what happened. After that, what happened? Let's take ATGL. This happened in 2021. Now this is a very interesting stock that I want you to understand. Now why is that? Because this is a non-textbook example that, I can just give you very good examples which are textbook. Now this is a non-textbook example. Why? Now you would scan here Friday 12th Feb 2021, or you might have scanned even before here, and you could have taken an entry here and SL would have got hit. Absolutely no problem at all, right? The first setup, if it hits SL, and second time the same setup comes up, it just gets more juicier. Now you'll take an entry here, SL get hits, and you'll take an entry here. Good. The important thing is that the breakout has failed, and then the third time. Okay, and you can see in all the examples that we have taken, the high never breached here, okay, but I mean the high of the base never got breached. Here it kind of attempted in the first itself. Now this is second attempt, now this is like fourth attempt. This is the high that got created, first attempt, second attempt, third attempt. Now what happened? Now you can take an entry here, no problem at all. So usually we'll go with 4% ESL, and in this case you can take an entry here, that would be a 4%, and then you can just ride your trade. I would have pyramided my position somewhere here or here to maximize the output. And see, and also I would like to point something. Now if you can see here you cannot even see the candles. The candles PDH to PDL are so small, it means that supply is getting absorbed in a fashion that nobody can imagine. And what happened after that? That's history. Now let's just go for the last example, Happiest Minds Technologies. It came as an IPO in 2020, very good IPO, and it started forming the base from its IPO high. Now that is something special. Now any stock that we have discussed so far, the base was formed after some 5-6 years. This is IPO high. IPO was on it got listed on 17 September 2020, and then it just fell. Base formation happened from September 20 to Feb 21. Now when would you scan? You would have scanned on here, 12th Feb 2021, which is a Friday. Is it close to its IPO high? Yes. And then what happened? Some sort of tightness, extreme tightness happening around IPO high. So where would you enter? You would enter at PDH or swing high, it doesn't matter, but SL cannot be more than 4%, right? So let's just take you have entered on swing high, and you would capture such momentum. I would have pyramided my position somewhere here. I would have taken an ESL, and again I would have tried to pyramid my position maybe here, again ESL, and third time I would have tried here, and I would have made some money. And again I would have pyramided my position here, taken SL, here I would have tried my third position, and then it flew. What's important? So scanning on Friday, great. Checking if it is a big base high, excellent. Some sort of consolidation, price tightness, absorption supply, it's all the same thing, right? Absorption supply is equal to price tightness is equal to contraction. These are all same thing with different words, okay? In this case we can say price tightness. Somebody would say this is an absorption supply. The supply is being absorbed at all-time high, and then whatever. So I hope you have understood the point. And there is one more question that I would like to discuss. See, in scans, what if you get 20 setups on a Friday scan, right? What would you do? You cannot take position in all the 20, because you are going to give an allocation of 15 to 20% per stock, so that might, at maximum you can take 5 stocks. So how would you decide that? You just need to do many deep dives, study hundreds of stocks, and come to a conclusion. And what if Happiest Minds took my SL last week and popped up again in this week? I think I have repeated 10 times this time in this video. If it took your SL last week and it again came in scanning this week, you should love it and trade it again. Okay, so that's all from my side, guys. Thank you. Thanks a lot for watching this long video.